So now it's about the future. I think we have seen all this history, and we have seen the decisions made. Again, that's something about to consider. That this is a large country. This is a highly industrialized country where steel and aluminium and copper and cement plays a huge role. And this is a country which starts with the high burden to be a coal-based country. And I think that's an important point. But anyway, I already described this is neither about nuclear only, but nor it is about the short term. I think what happened in 2010 to 2011 is that a framework which was set up for the long term, which is on nuclear, which is on greenhouse gas emissions, which is on renewables, and which is on energy efficiency. And this is essentially the framework which is on the table, and where policy starts to step in step by step to develop policies and political instruments to go for this. And essentially there are two key pillars. The first is the reduction of greenhouse gas emissions by 80 to 95% in 2050, which is in energy terms, if we continue to eat some steaks and to run some agriculture, etc. So it's essentially the decarbonization of the energy sector. And this is the interesting point. And this is the important point in terms of political strategies when we discuss the 2020 targets at the turn of the century. We had a lot of debate how much new coal-fired power stations would fit into a 40% emission reduction by 2020, and whatever. There's a broad range which you could consider to be consistent to this, depending on the assumptions for all the other sectors. And the range has been between 0 and 15 new coal-fired power plants would be consistent to a 40% emission reduction by 2020. This is an obsolete question if you take the long term. To 2050, decarbonization by 2050 means no new coal-fired power plants. But that has been the changing point in the perspective. So the long term. The second is the nuclear phase-out. We will see in 2015 the decommissioning of one additional nuclear power plant, in 2017 and 2019 another one, and in 2021 and 2022 each year the decommissioning of three of the remaining six nuclear power plants. So the history of nuclear power in Germany is probably comes to an end in the end of 2025. According to the recent economic situation, and I will illustrate this with some modeling results. E.ON has already announced that they will close the nuclear power plants, which has to be closed by the end of the year, a couple of months earlier, because of the economic situation. But anyway, it is about the alternatives, and we have a lot of this debate on these targets for renewable power generation. 35% in 2020. In the law, it's about it's at the moment between 40 and 45% by 2025. And so this trajectory to renewables in the power generation, but also in the other sectors, that means in transport and in the heating sector, etc., etc. The most challenging issue is the energy efficiency, and you can see that there are also very ambitious targets in the system. And I would highlight this: the reduction of primary energy in the building sector by 80%. That means insulation, cogeneration, etc., etc., is probably the most challenging target of the German Energiewende. So it goes beyond a nuclear, it goes beyond a renewable power generation, and it goes beyond the year 2020. And that has been stabilized the political arena very much, because you always can ask the question, what is the contribution of a certain policy to reach the long-term targets? And that is a new pattern in policy, and we are just in very nasty debates on how to deal with the coal-fired power generation to reach the 2020 targets. And one of the most powerful arguments is how certain investment patterns are consistent to the long-term trajectory. And you can't bypass this, you can't ignore this anymore, given this policy framework. The key challenge and the key opportunity is at the moment, and that is a bit different, maybe in, I don't know what this says to me here, is that the recent modernization of the energy sector takes place at the intersection of two totally different transition processes. The first transition process is the transition towards the liberalized market. The Germans have liberalized the market in 1998, which had some effects in terms of the market structures, but one of the most worrying effects has been that immediately after liberalization of the electricity market, the investment crashed. The investments in the power sector crashed. If you draw the statistics from the 1950s to the end of the 1990s, then after liberalization of the power market, the investments in the power sector for grids, for power plants, etc., crashed by 50%. So we have seen in the last 15 years investment levels in the traditional electricity sectors which amount to 50% of the historical levels, which is okay after liberalization because this has been a very comfortable system, and the first 15 years after liberalization took place under the headline, "We will squeeze out the existing assets." This transition period comes to an end, and there need to be investments anyway. And that means that the question is not, is there a need for investment? The key question is, what are the investments? This is the good news in terms of all those who deliver machinery equipment. The bad news is for the electricity consumers. If there is investment, the investment needs to pay back. And that means more money must be channeled into the system. But, and I will give you some European numbers on this in a minute, the only question is what are the investments? The key issues is that not if there is a need for investments. We have this need for investments takes place in a world where we see very different trends. If you have a look on conventional power generation, the cost of conventional power generation during the last years, and including also grids, etc., increased by about 70%. When you wanted to buy a gas turbine in 2000, that has cost 200 euros per kilowatt. If you are happy at the moment, you get a gas turbine for 400, 450 euros per kilowatt. That depends on steel costs and copper costs, etc., or prices, not costs, copper prices and steel prices, etc. We had debates on what are the costs of nuclear power at the turn of the century. At this time, it has been 2,000 euros per kilowatt. If you calculate back the feed-in tariff for Hinkley C in the UK, it's 6,000, and so this is an increase of about 300% and not 70. At the same time, the cost for many renewables, not for all, but for many, decreased significantly. Onshore wind, 20%, 90% for solar PV, and some cost decreases are still to come for offshore wind. This is the opposite trend, and we have high uncertainties in the global fuel markets. You see this. We have seen 150. We are now at $50 per barrel of oil, and and we don't know where this will head to. The only lesson we have learned during the last 10 years that the major challenge in terms of the fuel markets doesn't result from the price levels. The major problem or the major challenge from the fuel markets, especially the global fuel markets, results from the volatilities. And so price levels is one issue, but the price volatility creates larger vulnerabilities to consumers and to economies than the price levels. There is a need for ambitious greenhouse gas emission reductions, but we have the key instrument, which is in a deep crisis, is the European Union emissions trading trend. And we are in many, but not in all regions, in a situation where variable renewables, that means solar and wind, shape the electricity market, and this trend is beyond the point of no return, because the economic structures which has been set up will shape the market for a long term. So that means that what we observe in the energy markets at the moment has something to do with Energiewende and something with energy transition, which is the transition towards a decarbonized system. But you need to reflect that this is at the intersection with the transition towards investments within the framework of a liberalized market, and at the intersection with the transition to global fuel markets, which we won't see stable prices for the decades to come, as we have seen this for many decades of the 20th century. And so the problem is that these intersections of this intersection of these three transition processes are key determinants for energy policy and the energy transition. Again, this decarbonization is the overarching target. We have explicit phase-out decisions on nuclear in Germany, Switzerland, and Belgium. We have explicit no phase-in decisions for Italy, Austria, and Denmark. We have the opposite trend for France, and we have many other debates. I will present. I spent the year 2011 in the advisory group to the Energy Commissioner Oettinger at this time to work on the energy roadmap for the European Union, which has been an interesting exercise because it has underlined some of the truth you should consider if it comes to designing future energy policy. This is a complicated graph, and I don't want to go to into the details. These are the system costs of the future power system. There are different scenarios. That is the historical situation. This is a world without ambitious climate policies, but a trend where investment needs to take place. And here are 5 different decarbonization scenarios. And I would leave you this complicated graph with 4 essential messages. The first message is whatever we do, in Germany, in Hungary, in the UK, wherever, there will be a need for modernization, and there will be a need for investment. And investments need to pay back, especially if these investments take place in a world where steel is more expensive and copper is more expensive and concrete is more expensive than it has been at the turn of the century. And so it is true for all the scenario, whatever you think about climate policy, whatever you think about nuclear, renewables, etc., we are entering a phase where the system cost will be approximately 30% more expensive than it has been in the past. You can postpone this sometimes, but the matter of fact and the economic reality is that there is a need for investment, and if there's a need for investment, there's a need for payback, and somebody has to pay the bill, and usually that's the customer. The second interesting point is that whatever you think about climate policy or decarbonization, the system costs will be approximately the same. the only question is, what is the structure of the cost? And I think this is a very painful truth for policymakers, because the truth is all those who promise to the customers that the prices will be limited or will be decreased in the future, they lie to the customers, because the bill has to be paid, whatever the structure of the future system is. The third issue is, and this is a challenging issue, that the structure of costs will change significantly. That means the capital costs of the system will be the dominating source of costs, and this has implications. And you all know this. I don't know who is doing this.
Perhaps I should simply
close. Play now.
But because and the interesting point is that you all know this. I don't have it in my pockets here, but you all have these gadgets there, what you are playing there, these iPhones. You all know this. Why do you know this? The marginal costs of an additional phone minute is zero, because it's capital intensive, is zero, and therefore the system can't be paid back by selling telephone minutes, because in a competitive market the pricing is necessarily based on marginal costs. And if the marginal costs are zero, the prices are zero. The problem is, who pays back the system? And you all pay back the system by paying flat rates. And the flat rate is nothing else than a capacity payment. And therefore, this is the structure. If you have a look on these structures, a capital-intensive system with low operational costs and with extremely low, close to zero, short-term marginal cost will require different revenue streams. And that's the pattern of the future. It's the pattern of paying flat rates or capacity payments, which is good news for paying back the system, which is bad news for energy efficiency, etc., etc. And so you need to deal with this, but this is an economic matter of fact, and that this is the world. So it will be capital intensive and will require a different system, and that is an exclusive issue for the high renewable scenarios. Beyond 2030 and beyond 2030, there's the matter of flexibility and storage, and we all know that storage that there's no storage, there's no such thing that storage. There are many different options for storage, and there are many different options of flexibility before. But again, beyond 2030. This is the challenge for these high renewable scenarios. That is obviously clear. However, at the time when these calculations have been made, the cost for nuclear, which we assumed have been half of the costs we see at the moment, we have assumed for 2030 cost of renewables, which we have seen last year. And so this has been rather pessimistic assumptions and probably realistic for CCS, but CCS is not a matter of a cost. It's a matter of public acceptance, and the future storage costs are widely unknown, or storage competes against other flexibility options. And before you store energy, you can see different consumption patterns. You can go for power to heat, power to chemicals. There's a long way to go before you really end with storage in the system. But anyway, this is the issue beyond 2030, and I will come back to this in a minute. This is the German corridor, which is in the legislation. Now here we have this expansion trajectory, and there's a corridor which allows some flexibility. But anyway, when like last year the PV installations go beyond the corridors, then the digression of the feed-in tariffs will be much more smoothly than before, and so there are some control mechanisms to hold the expansion within this corridor, and you can see this is approximately this trajectory. This is the number in terawatt hours. The major challenge results if you draw this picture here in gigawatts. This is the cost. And that is important. That's an important point to consider. You know that each residential customer pays at the moment 6 € per kilowatt hour for the support of renewables. But it is important to have a more detailed look into these 6 € per kilowatt hour for the renewables, because essentially this 6 € consists of 3/3. The first third is that the industry, and so each customer pays approximately 2 € because a big part of the industry is exempted from paying the surcharge for renewables. This is an issue of industrial policy. This is a subject to strong controversial debates, but each customer, each residential customer in Germany pays 1/3 of the renewables surcharge to exempt the industry from this surcharge. And this is the industrial policy approach to Germany. You can agree with this, or you can disagree with this. That they try to lower the electricity prices for the for the energy intensive industry. And if you compare, for example, the network access fees industrial customers pay in Hungary and pay in Germany, then you can see that they pay in Germany half of the network access fees than they pay in Hungary, because this is a strategic industrial policy issue. But I think this is the first third. The second third, and that has to do with this buckle, that the major increase of the cost of the system results from the major take off of renewables, of PV. So in between 2008 and 2013, the expenditure per PV have grown by the factor of 5. At this time, Germany has been 40% of the world market, and we see the perfect innovation curve. That the cost of renewables decrease with the on a logarithmic scale with the global installations. And in other words, if Germany has represented the 40% of the world market, then the German customers have paid 40% of the cost reduction, and so buying down the costs has been one of the most successful German energy policy programs to the world. And again, and each German residential customer pays 2 € for this. This is if you say there is an average cost of 9 € for renewables, and what is the difference between the amount of money they paid here and this, let's say, generic 9 €, then this is essentially the 2 € the German residential customers have paid for innovation. And when again this Chinese the coalition between the Germans create a market and the Chinese to waste a lot of state money to build all the plant, have delivered a public good to the world, which is called cheap PV. And again, in Germany we are at the moment between 9 and 10 € per kilowatt hour. And I just came back in December from the Philippines, where you don't have 1,000 hours sunshine, but 3,000 hours sunshine. Then you are at 3 € per kilowatt hour, a full cost, which is pretty attractive. Again, this is this buckle. And then you can see there's this longer term, and this is the expansion. This is the expansion of renewables. That's the remaining 2 euro cents, and 2 euro cents to pay back for investments, which are the future of bulk energy, is not that bad. And so, if it comes to the German power prices, you always need to consider that there is a significant premium for renewables. But that at least 2/3 of this significant premium come from other motivations, and the other motivations is industrial policy to gain competitive advantages for the German industry, and secondly to buy a global option. I think if you see these costs, and this is the rationale behind, and we had long debates and long modeling on this, then you could ask the question: what is the what does it mean in terms of the future cost? I think you can make a thought experiment. You can buy the old system on the basis of new technologies. That means you simply reinvest the old system. Power generation infrastructure, etc., etc. Then you end with system costs which are somewhere between 63 and 65 billion euro annually. And this is the new system. This is the number I showed you. In between there is a higher need for storage, there's a higher need for infrastructure. You can see there is a difference between the long-term system cost, which is somewhere between 65 and somewhere between 80. And essentially, this is the bet of the German energy policy. The bet is that the fuel prices might be higher in future, and carbon emissions are not longer for free. And the bet of the German energy system is that CO2 prices will be not longer low in the future, and that global fuel prices will be higher in future. And so this is the key decision which has been made. The interesting point is here because these are subjects to volatility. And the future system here is much less vulnerable in terms of volatility. But again, this is a strategic debate, a strategic decision. How does this shape the market? And this is the core of the debate, why you need to make a strategic decision. This is a dark and cold week in Germany, in the old world. The old world, base load, medium load, peak load. How this looks like in 2013, you can see here, increasingly wind is coming into the system, and even in this dark and cold week in Germany, there are some hours where wind delivers 50% of the load at low load areas. How this looks like in 2023, and this looks like a dark and cold week in 2033. And you can see here for the first time in this dark and cold week in 2033, you can see here for the first time there is a need to deal with surplus electricity. And the question is where the surplus electricity goes. Will demand pattern change? What is the role of power to heat, etc., etc. But anyway, it's the dark and cold week. Let's have a look to a windy week in Germany. Again, this is the traditional word. These are the historical data of 2013, and you can see here significant parts of the load curve are covered by wind. That's in 2023, and that's the windy week in 2033. The lesson learned, there is no need for baseload, because baseload has been the economic opportunity to operate or to build the economics of a plant on the fact that you operate this plant 7,000 or 8,000 hours a year. And this is the windy week. I'll show you 2 other weeks. The opportunity of baseload which is even in a dark and cold week disappeared to some extent, will disappear in a windy week almost completely. And if you take the area beyond the curve here, then the opportunity for baseload power generation in 2033 disappears for, let's say, 20 to 25%. Okay, a sunny week. The old world, that's Pentecost. It's always warm. The electricity demand is low. The week number 29. Sunny week in Germany, 2013. That means in summer, peak load is gone. The residual, the solar has shaped the peak, and has shaped the economic opportunity for peaking generation. That is one of the reasons gas-fired power generation has disappeared from the German electricity sector almost completely, besides cogeneration, because cogeneration is operated in medium load. Anyway, 2033. So again, the opportunity for base load has disappeared. Okay, the windy and sunny week, the week number 16. This is 2013, much more impressive for 2014, but we have not yet prepared the graphs for 2014. 2023, 2033. Again, increasingly the need to deal with surplus energy, that means to deal with new areas of consumption, to put these into district heating systems, power to heat, to make heat, and for the long term to store this. And that means, again, my key theory, or my key statement behind this is, as soon as you have a certain level of variable power generation in the system, which is comparatively competitive in the system, if you have an appropriate market design, the old structure of economic opportunities, especially for base load and to some extent for peak load, has disappeared. And again, this is the economic reality. All the new baseload investments, coal, nuclear, whatever, will face over time. Because if there is 30%, 40% renewables in the system, and there will be 30% to 40% renewables in the system, giving the cost trends, then for the economic opportunities for the baseload have disappeared. Again, this has been not a market-driven process. It has been driven by a strong regulatory framework, which is not only the feed-in tariff. I think you should consider that there are 4 success factors in. There's the guaranteed grid connection. This has been a challenge for many years during the 1990s, but after liberalization and the unbundling of the generation and the grid operations, we had an interesting change of attitudes of the grid operators. After the unbundling, and especially after the ownership unbundling of the grid operators and the traditional generators, the grid operators have discovered that their only future business is investment. It's a regulated business, and their only source of return is to go for investments. And so we have the interesting debate that one of the major proponents of the renewables rollout are the grid operators, because the rollout of renewables increases the needs for grid investments, which is the future revenue stream for their business. And so a part of the electric utilities, the grid operators, changed their position from being opponents to the rollout of renewables to proponents of the nuclear renewable power generation, because this is the only driver for investments. And in a regulated business, the investment is the only source of revenues for them. Second, the priority dispatch, that has been a debate on long years. This argument, which is still in the legislation, is of less importance. It's increasingly of less importance, because if there are short-term marginal costs of solar and wind of zero, they are dispatched on a priority basis. We have the guaranteed long-term feed-in based on cost, which has been the major source of investments, and complementary regulations because of land use planning, licensing, etc., etc. We have seen this major rollout, we have seen these major cost decreases, and we have seen the new industries and a broad economic participation. I will show you some numbers in a minute. However, we are at the turn of the phase where renewables represent the niche and where they start to shape the system. The question is, what is your definition of the niche? In my definition of the niche, you are in the niche as long as you always find somebody to be cannibalized. If there is nobody, or if you can't find anybody who you can cannibalize, you have left the niche. And in this world, beyond the niche, you need other mechanisms, other market mechanisms, etc., etc. And that is the debate we are in at the moment. A short excursion to the public perception, and you should always bear this in mind. This is the opinion poll of the electric utilities. This is so-called Energiemonitor, an annual poll. The interesting point is here, 2013, 2014, the Energiewende is very important. Even after all this debate on electricity prices, 90% of the electricity customers says it's a good thing. The second is, and that's a surprising thing, and it's a representative opinion poll. The expansion of renewable energies is too slow or just fine. Even after all these cost decisions, 50% of the customers say it's too slow. And just 1/3 says it is just fine. That means 80% of the customers say we should continue on the pathway we are on, or we should accelerate it. However, the customers are not stupid. The question is, if the electricity is produced mainly by renewable energy sources, the prices will rather increase, decrease, or remain as constant. The message is that 70% of the customers have realized that it will be a more expensive system in the future. And although this is the fact, they accept this. There's no fear for blackouts, and one of the issue is the electricity import. The reason for this high acceptance is a thing which I would call economic participation. This is the structure of ownership of the capacity, of the renewable capacity, which was installed in 2012. You can see here the major four utilities. These are the utilities which own 80% of the conventional fleet. They own 5% of the total renewable capacity. The other utilities, which own 20% of the conventional capacity, own 7%. That means almost or nearly 90% of the capacity is owned by non-traditional investors. And you can see here individuals, farmers, industry, funds and banks, etc., banks, etc., etc. And again, as I pointed out before, this is the reasons the conservative can't disappear from supporting renewables, because these are the new vested interests. And this is very clear if you have a look on the structure. We have run for more than 60 years the German power system based on 500 large generation units. I failed last summer to load the most recent power generation registry into my Excel, and I have always the most modern Excel because we have at the moment approximately 1.2 million PV installations in the country, 30,000 wind power installations, 10,000 biomass power plants, 30,000 small and medium scale cogeneration plants, and 700 conventional power generation units. And this is a totally different structure than it has been in the past. And this is the challenge for the system because it tables the challenge of coordination. In the good old world of 500 large power generation units, in principle, you were able to coordinate the system by phone calls. That won't work here. And this is in the world of 30% renewables. If you go for 50, 60, 70, it's a system of about 10 to 20 million installations. And that tables the question how this system will be coordinated. And I have no idea how to coordinate the system besides basing the coordination on prices, on price signals, which is a painful message because the success story behind the first phase has been protecting renewables from price signals. And the challenge for the next years will be to find a way to balance investment certainty and basing operations of plants on price signals. That means to expose 1.5 million installations to electricity prices somehow on the one hand, and on the second hand, to limit investment uncertainties. And that's the huge challenge, and that's the new role for new market design, which is on the table. And that means you need to design certain remuneration mechanisms which deliver a certain degree of investment certainty, also in order to enable broad economic participation. But on the other hand, there's no way to escape from a strategy or from mechanisms which expose renewable power generators from electricity prices, from wholesale electricity prices. So this is the nice thing with the renewables. The key issue is that there's also a need for decarbonization of this part of the scheme. And therefore, this is an issue of to have no coal-fired investments, and secondly, to disinvest from the old high-carbon assets. And this is the challenge which is on the table at the moment, because if renewable essentially substitutes natural gas and the coal fleet remains to be constant, we will see some decreases of carbon emission reductions, or some decrease of carbon emissions. But this pathway of carbon emissions will be not suitable to the long-term targets of decarbonization, and therefore the German energy policy in the power sector struggles at the moment with the expansion of renewables, which is almost agreed, where the mechanisms are in place. But the second pillar, to decarbonize the fossil fleet, is one of the debates which is on the table at the moment. So energy efficiency, the future of energy efficiency in the power sector is an open question, and we need additional instruments to maintain energy efficiency in the world of flat rate payments. This is the emerging challenge from all these new market designs. The stronger role for low carbon fossil fuel, the massive infrastructure rollout, which is not fun. There's a lot of resistance if all these new grid infrastructures needs to build a new market design which reflects these extremely low short-term marginal costs and extremely low wholesale market prices in the European integration. Obviously, we have the building or the heating sector. And this is obviously one of the blind spots of the German energy policy. There's a need for much more stringent energy efficiency policies, because we spend a lot of money, we spend a lot of efforts in the power sector, which is 40% of the carbon emissions, and so it's an area of enormous importance. But anyway, energy efficiency is at the moment it's at the moment the blind spot, and the key challenge for the future is what will be the carbon-free energy supply for the heat market, because it is about decarbonization. It's also about not using natural gas in the heat market. And the question is, what is the carbon-free energy supply to the heat market? Could be electricity, some part renewables, could be district heating, which is based on renewables, could be hydrogen, whatever else. What are the interactions between storage and using carbon-free energy supplies for the heat market? The same applies to the transport sector, where the additional dimension is the modal shift to public and rail transport. Summing up, there are some important lessons to be learned from the recent policy debates and the future strategies. Again, it is a country which is resource poor, and where it is about innovation. And I think that this has been the driver, and this has been one of the reasons behind this broad public support for all these Energiewende stuff, etc. Besides all these debates on cost, etc., because the majority of the country is convinced that the key success factor for the country is innovation, and if you go to all the valleys and the Black Forest mountains with all these medium-sized companies which earn a lot of money in between from Energiewende, that's the core belief of the country. Strong public awareness. Environmental nuclear awareness is an important point. We still have professional and strong NGOs, and we have in the first phase seen that progressive political parties took up the issues quickly, but in between, the economic participation is so broad that even constituencies for the conservatives, not that much for the liberals, but for the conservatives, are gaining benefits from Energiewende. The second is, we had a long debate, and that's my core business, on how to design this, and we had careful modeling, careful planning, etc. We started many years ago, but if you have a look to technology research in Germany, then I would guess that 25% of the technology research in Germany is focused on issues which have to do with Energiewende. If you have a look to all these Fraunhofer institutions, etc., we all know that there are essentially three major growth drivers. The first is innovation. The second is energy. The third is the environment. The big data has been lost to the Americans, and the future gap is future energy and the environment. And I already referred to the enabling structures for pioneering and the innovation. That's a strong role of states and municipalities. That means there's a strong subsidiarity in the system, a wide field of innovation among the 900 municipal utilities. We had many innovative technology and business entrepreneurs. I think the main supply companies for wind power are not Siemens, are not General Electric. This is Enercon, this is Vestas and others. And this has been companies which has been set up from students after university, which said we want to engage, or we don't want to engage in this old business. And okay, today they are billionaires up. But anyway, this is an issue. And we had at least the robust regulatory framework for the phase-in period. And the major challenge is at the moment that after this first phase, or the niche phase, we need to set up a regulatory framework which is suitable to the future needs, where coordination plays a much bigger role than investment certainty. And this is one of the, at least in my country, is one of the challenges ahead. Thank you very much.